Meantime, Goldman's raising their year-end target to 5,600, a third hike here, one of the highest on the street. Chief U.S. equity strategist David Kostin is here with more on that call and to talk about what's next for stocks. DK, it's great to have you back.
Nice to see you.
Why the move?
The move relates to 5 companies that is really driving the market, and it's really a story for this year. The market's up 15, 16%. 60% of that return comes from 5 companies, largely affected and influenced by AI. So there's 2 reasons, Carl. The first is the normal earnings pattern is that earnings get cut by around 8% over a 2-year horizon, kind of 4% one year, 4% the next year. That is your normal pattern. For 495 stocks, that has been the case in the last 12 months. Earnings are down, have been cut, earnings estimates have been cut by 5%. But for 5 companies, earnings estimates have been increased by 38%. So in aggregate, you've had really no degradation in the expectations, and the market prices expectations. So that's sort of the earnings side of it. Net less sort of weakness than anticipated as a consequence of the 5 companies. The second would be valuation. And the way we approach the valuation is to think about the equal weighted stock, the typical company in the market, which is a way of valuing individual companies, each company weighted the same. Multiple there around 16 times. And our forecast is that will be modeled, would suggest around 15 times the end of the year. So a little bit lower. But the premium that the aggregate trades relative to the typical stock likely to rise. And that model leads us to a valuation of around 20.5 times. And the combination there of earnings and valuation leads us to 5,600.
Your bull case is 6,300?
If you look at some different scenarios, you could have the mega cap exceptionalism. If that was to continue, you'd have a maybe 45% premium that the aggregate index trades relative to the equal weighted index. To think about that, the equal weighted index, SPW is the ticker, and SPX, kind of think about those two, one versus the other. And that's how we think about it.
Did you hate having to write this note? I feel like you did, raising, for an equity strategist, having to raise their target because 5 stocks just keep outperforming. You didn't change your forecast on real yield. You didn't change your forecast on the rest of the earnings picture.
Sarah, it's an excellent question. Only 27% of mutual fund managers are beating their index this year. 27% of core managers, 37% of growth managers. It's been a very difficult time to be an investor and a strategist in terms of the tailwinds. It's been 5 companies that have really explained the story of the market. One of the things that's pretty interesting in terms of developments that are taking place is the IPO market. We've been talking about this for a while and expectations. We have an IPO barometer now above 100, indicating kind of the normal, how conducive a market is for IPOs. This year, we've had $18 billion of IPOs. That compares full year last year around $22 billion and $8 billion in 2022. So you've had a big increase. And I was recently in Northern California. Mm-hmm. We had 55 companies in Napa Valley to discuss. These are private companies with the expectation of going public in the next 18 months. And that's sort of one interesting aspect of where alpha is likely to be.
So generated. You're excited about things that are other than just the big 5. I guess some people are questioning whether the concentration risk and outperformance is healthy for the overall market.
Well, healthy is sort of a pejorative term, but I would say it would be better if there was wider breadth in terms of the performance in the market. There's lots of opportunities in the market in terms of performance, and we talk about that every day. Some of the GLP-1 drugs. The real story that everyone's discussing, all the questions that come to us relate to AI. And we think about AI in a couple of phases. NVIDIA, big winner, obviously. With the infrastructure build-out companies, yes, some of the hyperscaler companies, some of the semiconductors clearly benefiting. ARM, TSMC, kind of other aspects of the infrastructure build-out. And there's been much more skepticism around the sort of enabler, the revenue companies that will, the benefits of widespread adoption of AI. And the question, Carl, is about what is the return on investment of all those AI dollars. And that, I think, is a big question. It remains to be answered. But you'll start to see that in the next couple of quarters. If there's not some evidence that there's a return on this money, then I think a lot of investors will start to ask, is there a real story there?